Just as a recap here, as we're starting our seminar out this lovely Wednesday midsummer here, use the boomerangtrader.com site as your all resource reference site, and particularly the resource section for all the current short videos I've made on very specific topics such as trading on the right side of the market, how to trade crude oil with Boomerang for 97% winning trades, how to follow the trend trading method, how to manage congested areas and whipsaw in the market, which is part of any day trading system you're going to ever see is going to have that. Our endorsement section, which is always very encouraging to read what all the other new Boomerang owners are getting, and how to use Hyperscalp to read into the price and bias with extreme precision. So again, today what I'm going to focus on for the U.S. stock indexes, it's called the bunker boomerang trading method, which is really, it's the same as our original method, but the bunker method has a few key elements in it that are very important for markets like we have right now. So let me go into that a little bit with you. Right now, we just had 2 weeks of these political conventions, which is a big deal. It occurs, you know, every 4 years they have these, and it's a big deal, and the news is going crazy. And I don't want to talk about all the controversy and the conspiracies and all the stuff, but I have never, ever in my lifetime of watching these political conventions seen such a battle, such a vicious war battle to try and stay in power, which is really what each party's trying to do. They're like gangs, and they're just fighting in the street with knives and bats and glasses, beer bottles, anything they can get to fight with, they'll grab it and start gouging and poking and stabbing and shooting. They don't care as long as they get their party in power, because that keeps the current crony group that's in there entrenched in power to keep their sweetheart deals going. And when you get, especially if you get a guy like the current Republican running, who's a kind of an outside political guy who's really coming in to make some big changes, oh, the fighting's even worse because there's a built-up 8 years of heavy cronyism in there that he's vowed to, fight and break apart a lot of the fake pork barrel spending and all that. I'm not making a political comment. I'm just saying when you get a change like this, my God, things are going to get vicious, and it's only just starting now. Anyway, the point is the last 2 weeks and starting in this week's gotten a little smoother. The last 2 weeks have been completely vicious, unbelievably vicious. Now, something to keep in mind too, and this is sort of just a statistic that you should know. You should know this statistic, and it is this. Oh, I got it over here. Hold on a quick second. I really want you to know this. When, for the last, since 1928, that goes back pretty far. If any of you are here in the room and you were born around that time, well, congratulations on being an 85-year-old trader. Welcome to the webinar today. And we do have some. We have some. I had one recently who is in our endorsement section. He said, I'm so happy at age 87 to not be watching Fox News all the time like my friends and playing bingo and chess, but to be trading with Boomerang. But since 1928, there have been 22 presidential elections. In 14 of those, if the markets rose for 3 months prior to the November election, 12 of those current incumbents in the market, in other words, the current party in the market, stayed in there, whether this same party stayed in. If in the 7 of the 8 elections where the markets fell during this period right now, where we're in generally over a 3-month period, the other party would win the election, because they would feel, a lot of people in general, because of the stock market, would feel disappointed. Oh, the market's falling. This group in there now, they're no good. The market's falling. This type of, it's a little bit simple, but it shows you the power, again, since 1928, of how the market really affects people in a big way. Well, what have we seen the last month or so, especially with these political conventions and everything? Markets getting, ever since actually January or like February, March, markets just getting propped up and propped up, insanely propped up higher and higher by these riggers, these central bank riggers, these Federal Reserve characters, who got all this money that they've taken and they just prop up and rig up the markets. And you can see now they're trying to keep the incumbent party in. But the trend lately over the last several decades has been 8 years per stint. Once you get the Democratic Party in there, they're going to stay for 8 years. And you get the Republican fellows in there, they're going to stay for 8 years. You get the other group in 8 years. So we're back on this cycle. We had the 8 year Clinton cycle way back when, replaced with the Bush 8 years, and now we've had 8 years of the Democratic Party again. Um, and now theoretically they're going to switch parties, but I'm telling you right now there's so much opposition to this outsider who wants to change a lot of things, who exposes a lot of the conspiracies of the markets and the governments and the way they operate, that there's an attack even from people of his same party. So going to be a very interesting election. The point is, the last 2 weeks, yeah, it's just common sense, but you'd be surprised how many traders I talk to that don't understand. I have to explain to them. That's not a normal market the last 2 weeks. We're talking radical election vicious fighting. You with me? So I'm going to go over that period and show you. In spite of that, in spite of the additional whipsaw, in spite of the additional uh, heavy manipulation in the markets on the bullish side and everything, still, Boomerang works like a charm. But you got to wait for the setups. That's the hardest, what I call the hardest, easiest part. And the hardest part of it is because emotionally you're in the markets and they're flying all over and you see them go here and they drop down and you go, oh, I could have been short. Or you see them here like today into the close today. Oh man, look at that big move there. Wow, the emotions drag you around and make you think I should have been aboard that. And even worse is a lot of traders start imagining, and it is literally only in your mind, imagining that all these traders are long here and they're riding this thing all the way up. No, they're not. Many of them are short and getting stopped out, and that's what's causing the rise because they got short here and they got short here and they got short here. They're getting blown out of the market, causing the rise. A lot of it's rigging, so it's actually kind of artificial, and a lot of it is you don't want to be thinking, letting your emotions pull you around saying, oh, I would have, could have, should have. Would have, could have, should have got in that trade. It didn't matter. All that matters, if it's an authorized Boomerang setup, you'll make money and you'll be more comfortable and you're on the safe side of the market rather than try to chase the prices rolling along. So with that in mind, it's time to go over the Boomerang setups. Before we do that though, I hope that statistic was valuable to you. It helps you understand two things. Number one, what possible reason could be for this intense upside market rigging. Hello, to keep the current party in power for another 4 years. What could be the reason if the market starts dropping really hard? Which I'm expecting a 3 to 5% pullback. Now we already got started here, but they're ramping them back up here today. You can see they're starting to bring them back up again. But a 3% pullback from the current high would be a 65 handle pullback towards the 2110 area on the ES, using the ES as a measure. And if we get a 5% pullback, it's 108 candles, or points, that's down to around 2070. If that happens in a slow grind lower over the next 2 months or 3 months maybe, it could be pretty tricky for the current party in power. And still other things can happen that can override statistics. But I just want to make sure you had those. Like here, for example, sometimes oh man, look at that big move. Oh, I could have been in it. Well, guess what happened? And just showing this particular move because it's a huge move. This occurred on 8/1, just a couple days ago. However, following the authorized Boomerang method, looks what would happen. Now you're scalping for 3 points. Here's a Boomerang channel opening up. It's all shaded in the green color. For those of you not familiar with Boomerang, you can study our Boomerang indicators on that the blog there that I showed you. You can access that for free and study the video. But we have, these are called the dynamic trend bands. You have the dashed dotted line here, and then the thicker solid line here. You have this green dotted line is the cobra, and this thin line here is the trade signal line where we key off of to make our trades. A trade channel opens and it's arrowed here with an alarm sound, and once we have the certain configuration, which in this case is this spread on the dynamic trend bands either being a point and a half or less spread apart here, or matching the same color, or having crossed over already, we buy a pullback to the signal line, and right here at 31.50, and up they go to 36 on this candle here. There was a minor little pullback, but that was no big deal. So there's your 3 points. Had you stayed in the trade, this is a classic case, using our method called the trend trading method, with the dynamic trend band crossing over the cobra right here, we would have bought a pullback to the cobra, which is right here at 36.25, and up they run for 3 more points. So off of this one move already, you've got 3 points and 3 points. And then we have another trade set up here, which is called a second level trade, because there was no counter move here until you got to here where the candles counter traded against the dynamic trend band number 2. We had a new trade channel, a pullback to the signal line right here. Let me open this up a little. There we go. Pull back to the signal line right here with all the dynamic trend bands matching. 49.25 and 49.25 jump to 53.25. Do you see that? So actually, if you're following the boomerang method, you didn't miss all of this. And the thought that you're going to buy them down here and hold through all this, maybe you got lucky and did that, but odds are along the way you would have gotten nervous because you had so many points coming in, would have jumped out. Heaven forbid you would have shorted it, or you might have gotten shaken out here. But the point is, you got 3 points, 3 points, and 3 points here. Very decent move. 9 total points out of this move with a lot of safety following our precision method. Do you see that? So right there I described 2 or 3 of the methods in this one move. That is the initial boomerang market force thrust, what are called the momentum blasts, technically. That's what I call them. You have the trend trading method, which is another method, and you have the second level trade. Now again, I promised you I'd reference that today, so if you go to the Boomerang blog, if you're new and you're trying to learn about Boomerang, once you get they're the easiest thing in the world to memorize, and you see them setting up the market, you just have to click the buttons up here and take the trade. They're 90% guaranteed winning trades. We guarantee they're going to be winning trades. We can't guarantee your skill at trading, but we guarantee that the trade setups, if you follow them, will be winners. So here's a short description of the boomerang indicators. I'm just reviewing this again. You could read that. We're not at crude oil yet. The trend trading method I just described, which occurs when you get a steep dynamic trend band, number 2, rolling up. You're clearly in a trend here. That is a really excellent, powerful move. You can take a second level move, which was the one we showed you here, but you can also, if a trend trading move set up, which it did, you can take that. Here's a description of the trend trading method, and then down here our core method, which is the 2 boomerang day trader setups. There's 2 principal setups. The first, momentum blast, and the second level trade if it sets up. And then, like I said, I've showed you these the trend trading method, which is new, and I've got one other addition that isn't new, but it's something that all of our traders know about, and we'll get to that when we find it. But that's a method where if all of the pullbacks to the signal line are used up before there's actually a crossover, then you can trade a pullback to the cobra. So let me scroll back. I just happened to see that big move and I wanted to show that to you, and I didn't rehearse this or anything. It just happened to have the 3 exact methods in there. And that made it easy for me to teach this to you. And those are going to happen on a big move like that. Well, while we're here, well, this is pre-market, so it wouldn't be fair to show you this, although um, there was an accurate boomerang setup here on the trend trading method, and you can trade in the Globex times, but it's pretty slow. It's really not worth the risk, in my view. But I'm going to just not even look at the charts here, just scroll back because I want you to see how these convention periods ran. And this is that period here. Look at this. Massive upside rigging, some pullback, but it was like pulling teeth to get this thing as they're moving up and up and up. And you're sitting there going, when is this thing going to make some decent, honest pullback? Up, and they keep jamming them, and then a little pullback, and then cramming them up again. Then they finally let a little air out of the balloon, and then what? Start jamming higher again, a little more pullback into the close. But I'm just going to, again, quickly go over this period, not with this trade setups, just to show you how the trading went on these periods. A lot of whipsaw, a lot of choppiness, but that's normal for the market, especially look at this period here. Back and forth whipsaw, but I'll go over this in a minute. But if there's not a boomerang setup, you just stand aside, and that's the way it goes. In fact, let me quickly go over this so you understand. Guess what? There are no boomerang setups in this period. Now it went from 7 to, this is a West Coast chart, went for 2 hours. But that's not Boomerang's fault. That's not anybody's fault. It's not the market's fault. The market goes where it's going to go, but Boomerang's here to protect you. Now what you have here, there's no spread, tight spread or matching dynamic trend bands. The market just shot up. And this was, again, this was the weirdness, I like to say, the weirdness of those political convention weeks. We just got through 2 weeks of them. The market was really weird. You have to sit down and say, wow, the market's a difficult trade. Maybe there's something wrong with Boomerang. I didn't get any inquiries like that, but I know people sometimes think, and I go, no, you're new at trading and you don't understand. These are historic political conventions. It's going to be a little weird. Plus, hello, it's the middle of the summer. The summertime is slower because big hedge fund managers and a lot of traders do what? That's right, they go on vacation. They go on the boat, get on their boat if they're real rich, go out on their private island if they're richer, go to their vacation home if they're well off. And if they're like most of us normal folks, they have a little money saved and you go on a vacation for a few weeks. That happens in the summer, especially in August, by the way. Just to let you know, it's August. Take it easy. This whole month is a big month for legal offices taking off. Big legal vacation month, and as well as in the stock market. But look at this. There are no boomerang trades. This didn't set up here. There's nothing here. There's no short here because there's no matching dynamic trend bands. There's no long here because this is what's called a fat channel. Those of you who are familiar with Boomerang know our rule, and that is when you get, it usually occurs on a spike off a low or high, and you get candles like this one. Look at that, 95 to 98. This is like almost 4 candles. I mean 4 points in length, and 1, 2, 3. Here's another one here. 0, 1 to 4 points, 3 points, or 4 points, 3, 3, 3-point candle shooting up like, forget it. It's going to form a fat channel, and we're not going to buy at the top of the fat channel. If you turn your head to the left, you can see the big belly on this thing. That's why we call them fat channels. Try to insult them a little so you mentally don't want to get into them, you know. Oh, that's a fat channel. I'm not going to trade that. Then it went into whipsaw. And if you were live in this, you're going, oh my God, what's wrong? Why is the market what's wrong? Is something wrong with Boomerang? Nothing wrong with Boomerang. It's called the political convention period in the middle of summer. It's just the way it is. If you go over and look at the volume, you would see that the volume right now would be very low as well. So, and we talk about building a volume meter in our blog here, so you can make sure and do that. Is that on here? It's on the next page here. I'll show you that real quick. Very, very important. We have videos in here how to build a volume meter, how to research the markets. I give you some of the methods I use to research the markets. Here's one, how to set up a volume meter. It's very simple to read. You're mostly looking at this top portion here, which is called this is a 4-period moving average of the volume, and you're watching the 700 level on the blue line, the 300 level. This is how many contracts are be trading approximately every 4 minutes on an average. When that drops below this magenta line, under 300 contracts, it's okay, but just caution. If it drops down to half of this and they're trading under 150, be even more cautious because the market's slow. It's nothing. The markets don't trade the same all the time. There's all these different factors. So just wanted to show that to you. And so in here, there's no trade. Here's a new sell channel opening up. And the trend bands are really close together. And it's a doggone shame that they weren't slightly closer. Like if the dynamic trend band would have been the magenta color maybe over on this candle, you could have shorted right here, but it just didn't work because the market was whipsawing around and then it dropped like a stone here, forming a fat channel. You can't miss this fat channel here. Look at look at this candle here is 4,600 to 45.9, 6 or 4-point candle here, 3-point. You're not going to trade that, even though it panned out. Yes, the short there, 96 quarter, did pan out, but your risk is off the charts because, well, you could have taken it because there's a brand new crossover here, but still, your risk is off the charts going short here, especially in light of what you just saw. So this one occurs here. There's no trade here. Now here arguably is a second level trade because the sell-off here wasn't that bad, and usually once you get this counter move, you're watching for a yellow dot on the signal line right away. Well, it popped exactly as the new channel opening occurred. The print of the arrow, the alarm, and the print of the dot occurred at the exact same second. You might not have caught that. This one would have been okay here for a short trade. So you're just waiting, and then they fly. That finally occurred an hour and a half later after all this whipsaw. Hey, blame the political parties. It's just the way the market is. That's not going to be like that in September. You watch what happens after August is over. In September, October, we're going to get that market flying again. I can tell you, in fact, I keep stats in this every night. It's a very valuable thing I do. Very few people do it. It's just become a habit. It's a lot of work to do every night. But during this period, now again, this was the data, and this was 7/19. Let me read you the ranges during that period. Now this is during that first political convention, the Republican convention, starting on the 18th, right? And we just went over, was that the 18th? No, that was the 19th. But let me read when that week started on the 18th, the first Republican convention there. Here's the ranges. Now here's the ranges prior to that of the market. And I'm just reading the range of the ES. 32 points, 28 points, 20 points, 37 points, 20 points. You with me? 24 points, 21 points. Now, Monday the 18th, okay, here's the ranges starting that week of the first political convention. The range of the ES. Remember what I just read to you. Probably, I would say what I just read to you, the average range is about 24 points. Okay, starting on Monday. 9 points, 10 points, 14, 16, 13, 15, and that finished off the week there. Now going into the next week of the Democratic Convention, 15, 13, 16, 14, 14, and then this Monday started the new week. Now this week, Monday, yesterday, 17-point range, and today, 28-point range. Case closed. Do you understand what I'm saying? Do you see that? It was the political conventions. It contracted the range. That's this whole period here. It caused additional whipsaw. But let's start going over some of these trades now. If you know Boomerang and you know the rules, and you follow the rules, you will get plenty of trades. Here's a buy trade. I'm going to go through them quickly. And again, according to the rules, you can look at the videos if you want to know the rules. Here's a crossover, matching dynamic trend bands. Here's a sell, winning trade. No trade here because, first of all, you got spike candles shooting up and you don't have matching dynamic trend bands. Here, the trend bands match, but the market's going into a whipsaw flurry. Again, this is day one of the week of the first thing that I just showed you. The range shrunk like crazy, and they stayed shrunk and they stayed choppy all day. See the change? And then in the close, which you're not going to trade at 5 minutes before the market closes. It's not recommended at all. But do you see what I mean? All they did was they shot the market straight up, practically off, a little bit, choppy off the opening, shot it straight up that if you didn't catch this one, and then there was nothing else to do here except, well, there was no, it wasn't even it was so rigged, there wasn't even a trend trade move, which you practically always get on a steep dynamic trend band. Didn't hit, didn't happen. They shot them straight, and not also a very strong note, no second level trade. That's more proof that it was just a rigged operation. Markets trade up and they pull back, buyers and sellers, and this thing just went straight up, and all you had was riggers coming in on these pullbacks and not even letting them pull back at all and just shooting them straight up, and then they reversed and got going. But you only had 2 trades for that day, and then it went choppy here. That's not Boomerang's fault. That's the market being whipped around and manipulated during the start of the election week. And then they sold off some. I'm just giving you a quick example here because don't want to take up too much time because I want to go over crude oil too and answer your question, Robert. Robert's asking about crude oil, and I will show you all that. We'll go over all that. But here's a new day coming in here. No problem. Boomerang trade there. Market starts selling off here, but we didn't get a crossover in time to capture any of these sells in the channel because the dynamic trend bands had not got within a point and a half. They just fell off the wagon. So one trade there. Same thing here. They just shooting straight up. A lot of this is just whipsaw from the manipulated markets. Shooting straight up, no trade. Shooting straight down, no boomerang trade. Flying off that low pullback. Again, just rocket shipping up, forming another fat channel. It was fat channels galore. Here's another one here. They're trying to come in, they form a sell channel, and before they hit, down they go on the downside. Second level trade, we just went over this one a bit. The day closes, coming back in here. Great trades though. You see, you're still making money. You're still making right trades if you're patient enough to wait for the right boomerang trades. The problem was the political conventions turned the markets topsy-turvy, made them all full of whipsaw and everything. Right off the opening here, you had a smooth as silk sell trade because the dynamic trend bands had crossed. If they cross, obviously you're going to have a dynamic trend band number 1 is going to be the bearish magenta color. In 90% of the cases, you can trade the short there. You don't need a match here. You just need them a point and a half spread over here or crossed over, and you're all set to trade there. 3 points there, nothing here, because you got to have that spread tight. Otherwise, the trade is not authorized, and they just, same thing as yesterday, the day before. Look at that, just rocket ship to the moon, no second level trades. However, we did get a trend trade move here, and that's where the dynamic trend band number 1 crosses the cobra on the upside, and you want to look for a very quick pullback to the cobra. It should happen usually within 2 to 3 to 4 candles maybe. And there it is, instant 3 points there, and nothing more. It just again rigged, just kept shooting straight up. No rhyme or reason for the big NASDAQ push. You know, they're going to always cite, oh, Apple stock had better earnings, or news on Apple, this or that, or Tesla did this or that. Tesla's going to Mars to colonate people. Yeah, right. What kind of kooks are they, you know? Anyway, the point is, you can't even form a good operation here on Earth, but you want to go to Mars, right? Hey, there's no malls, no movie theaters. What are you going to do up on Mars, you know? Anyway, just kidding. But look at this here. So choppiness, you had to wait for it. There was nothing you could do. You could take the day off, but it was the political convention. It may turn the market choppy. Well, here they are crossing over. So if you patiently waited, finally, almost coming into the last hour, you got another sell trade. Don't worry. When the markets open up again, like this week, they've already started opening up, the trades are going to increase. You just have, it's like if you're a school teacher and the summer comes, you're out of a job for 3 months. That's part of the deal, unless you become a summer school substitute teacher. It's not that, oh, what happened? Oh my God, my career's over. No, it isn't. It's summertime. Same with the markets. Summertime, they get slower. I just proved that to you, and I showed you exactly how the ranges just dropped off like a stone the minute those political conventions start. So they're still going here. This is the 20th. So we're rolling into the next week where the Democratic convention started, and it got a little bit hairier on the sell side. So we had that sell here. Then the market closes. Again, I'm just going over this real quick on the stock index. I want you to understand the seasons of trading and stuff like that. It's really important. You know, here's a buy trade off the opening. Perfect, smooth, matching dynamic trend bands. Up they go. Here we have a classic match of DTBs, but that was after the market got crunched. Again, the whipsaw of the political convention. No trade here because what happened down here? They came down here and they just shot up like a rocket ship. Formed a counter fat channel. Same thing here. They go up here and then crunch to the downside. Very dangerous trading. And when you're watching this live, you're just going, oh man, what the heck is going on? However, lo and behold, well, now they start selling off, but again, no pullbacks to signal line because they had so much pent up buying there when the selling finally kicked in, got a little furious. So there was no counter trend moves or anything. Now, right here, though, you did have a trend trade move. The DTB, or the, yeah, DTB number one crosses the Cobra. You short the Cobra right here at 43. Clunk, down they go to 39. Choppiness. And here comes, this was a second level trade because you had a lot of whipsaw in here. You had the counter move that did not upset the color of the dynamic trend band number two. It reset the pattern, but the pattern shot back to matching dynamic trend bands. So you go short here, and there's another short for you. Matching dynamic trend bands is a key, and it's also part of what we call, and I want you to watch this video, very important, it's what we call the bunker method. When the markets got absolutely insane in January, you remember January? If you had, like I did, crude oil positions and gold, and they were the biggest ones in my portfolio, it was creepy. It was scary. They were roasting the stock market, but they were just roasting the crude oil down to 30. If you recall, I think actually went to 28 a barrel. There was companies going bankrupt. It's just blistering attack on the crude oil industry, and the gold was getting pounded. It was so brutal. I don't know what to say other than it was just like heavy. Well, I came up with, and it's already part of Boomerang, but I came up with what I call the bunker Boomerang trading in these volatile times. This is February 2nd, right after, I mean, the day after New Year's. If you recall, we came in on January 2nd, and that was it. They just started slaughtering the market, just hammering and slaughtering the market, and it just didn't seem to end. I'm just glad I survived because there was a point where I said, at this point, it's getting so ugly, I'm going to have to liquidate all these positions. And thank God I had the wherewithal to stand because now I got all that back. But boy, it was ugly. I mean, it was like even me, trading 26 years, I was just sitting there going, oh God, this is so awful. I mean, you got to call uncle at a certain point. You can't let your portfolios just get wiped out completely. Anyway, the point is, in the midst of that, I developed this method called the bunker trading method, which is basically what I'm showing you here. But if you watch this video here, click this and watch the video, I go into all the details of it. But basically, I will show you right here, the details are simply that you only take trades where the dynamic trend bands match, because those are rock solid winners. They're all rock solid winners. The crossover method, point and a half spread or less is vital, because with those DTBs getting ready to cross over and you got a channel in that direction, you want to get that first pullback signal line. your risk is very low. But when things get really nuts, like we're seeing in this example here, just wait for the DTBs to match color. Trade the pullback to the signal line in line with that channel, of course, and you will find that the trades will be a lot smoother. So as we finish off this week, which was the week of the Democratic Convention, look at the choppy whipsaw coming in here, amazingly choppy. And here again, you still got to honor the fat channels. Even if the DTBs are matching, that rule is still there. You can't just trade because they're matching. You have to make sure that there's not such a wide spread between all the bands, which caused from a fat channel. See, like here, it still ended up giving you 3 points. That wasn't the problem. It's just such a high-risk deal, even though the trend bands are matching, because you had this candle that just went from here, 54.75 down to, it was like a 4-point crunch. And it just caused more whipsaw. And then you're watching for matching DTBs. They didn't do it here. It was the political conventions. Don't worry about it. Shrunken ranges. Here's a match. Now look, notice the bands here, how tight they are. I want to show you this. Very important. Compared to here. I mean, it's day and night. Look at these bands, the spread between the bands. Don't take these trades when the bands are spread like that. You want trades where the bands are spread tight like this, or like this is good. Look at that. Everything's kind of tight. You get a pullback signal line, crunch, down they go. In this case, a sell trade. Again, here, the bands, everything's pretty tight here. That's good, but you don't have the right spread, so no trade here. Don't get mad at Boomerang. Don't get mad at anything. It's just the political conventions change the whole environment. The gangs, it was like two gangs that are all day long planning a strategy and talking about what they're going to do to the other gang, and then finally they go out that night and there's some agreement with the other gang. Meet us in the alley over on Watch and Watch Street, and then there they are. There's the face-off, and then yeah, hit it. And that's what this was. The two gangs, known as the Democratic and Republican Party, just going on full-on attack on each other, and it affected the market. So then they whipsaw them back up here, and just a thought, is it because the markets are being rigged up to try to keep the current incumbent party in power for another 4 years? Is it another attack on Trump and the change, the populist change? If we can rig the markets up and keep the markets propped up, statistics show that the incumbent party will stay in power. Is that what's going on here? Is that because I kept asking myself, what is with this disgusting, stubborn, upside bullishness and the absolute refusal to get any pullbacks? And I started wondering, and that's when I've rediscovered these statistics, and I was kind of tapped on the shoulder, went, aha. Anyway, so a big giant rig up. Let's see, did we get a trend trade? Nope. Notice here it was so rammed up. Most of the time you're going to get a trend trade set up. We didn't even get one here. They just rammed them straight up. But then, lo and behold, you got a nice matching dynamic trend bands sell here, and they just fell off the wagon. Again here, crossover, pull back to signal line, up they go for 3 points. You get real good at Boomerang, you can start putting on more contracts. That's a nice deal. A trend trade move, straight up, powerful move up, crossover here, pull back to the Cobra, and they shot straight up. Usually you're going to get it right after the crossover within 2 to 3 candles, like right here, and usually it's an instant winner on that side of the crossover. Again, here, nothing, just fell off the wagon before you could get in. You got to learn the rules. Now, if you're new, brand new to these webinars here, and you're just watching me now, you might be a little not confused, but just go, whoa, but it wasn't that a trade and wasn't that a trade. We have very specific rules which I've outlined. Mainly it's the fat channels, and we tend to avoid trading against flat dynamic trend band number 1 and 2 because it's just like, here's an example of flat dynamic trend band 1 and 2. I know it's right before the market closes, but these markets are going to whipsaw around the flatness of the DTBs. Anyway, it's easy to learn the rules. Just go to our blog. You can study those there. And you can watch, by the way, once you, with your newfound knowledge of watching a few of our short videos here, If you go over to the blog section, you will see, here's my announcement for today. You'll see recordings of uh, the seminars here that I do on the Boomerang trading. You can see they're all the recordings. Trading class will be next Wednesday. I forgot to erase that. Here's a recording here. Usually I just replace the announcement with the recording so you can watch past classes. Now, a new thing that I've started recently is called Your Weekly Boomerang Profit Report. And I show like what I'm doing here in the webinar, but I just reinforce it by showing on a very short video, usually 10 to 15 minutes, all the trade setups, and I calculate. It's like a mini 2-week audit report on the signals that's set up, and I send that out usually late Sunday nights so you can review that. So we got a lot of resources for you to see exactly how well Boomerang's doing so you can get involved in these trades and start making your trading life a lot easier. And that's why we trade on the right side of the market force. You notice I haven't talked about any indicators today except for the dynamic trend bands. That's because we don't really use them, but a lot of traders are in the markets. They want to know what all these indicators we have mean. So you can click on this video and I go over in extreme detail all of those, including the dynamic trend bands, the Cobra, and everything. All right, it's getting a little late, but we're okay. Now, once I get on the Q&A period, we can stay as long as you want to stay and ask questions. You see? But I don't usually answer them while I'm making the presentation because I'm trying to get through all the material. Then when you go in the Q&A, you'll be very well informed, and a lot of the stuff will get answered while I'm going over the presentation. So rather than go through all the setups, although I did want to go over today's, because I want you to see now that yesterday and today we're back into the wider ranges. Remember what I showed you? I hope you realize how important that was, what I showed you in the opening. I talked about the history of the election 3-month periods, and I talked about the ranges, and then I actually showed you, because I'm probably one of the only advisors on the internet that can do that, because I keep track by hand every night of the ES ranges, the high, open, low, and close, the Dow highs and lows. I keep track of all that every night, plus a string of about 6 indicators that give me the underlying market force bias, which I give to a select group of traders each morning. In other words, I tell them where the market's going to go before it happens. Anyway, this was 8-2. So this was the 2 days we just had of new ranges. In other words, the political conventions are done, and look at these ranges opening up. You see what I mean? Minute the stupid political convention, or they were good, I don't want to call them stupid, but you know what I mean. There's a lot of rah-rah and just a lot of emotions and people walking around with goofy hats and stuff, and I respect that. They're excited for their country, and they want to represent their party and all that. So anyway, the point is, look at those ranges all of a sudden, like magic, opening up again. That's because the contraction is over with the political conventions being over with. So let's go over 2 days, and then I'll switch over to crude oil, which is a little bit different. Now, so here's the opening. Again, it's a West Coast chart, so it's 9:30 Eastern Standard Time, 6:30 West Coast. Here's a Boomerang trade here for 3 points. They go into choppy whipsaw here. Notice flat dynamic trend bands. Just wait until they go down and tap the Bollinger Band and start a trending move. So here we go. Dynamic trend bands right here matching, short here. So that's your second winning trade of the day. Big crunch to the downside, but that's okay. When it starts crunching, don't go to sleep or take a break. Watch for what? Little quiz for you. What are we going to watch for? Well, that's right, the trend trade method. If this market is so steep that's going to push the dynamic trend band down under the Cobra, you better be ready, because the minute it does that, which occurred right in this candle, and then particularly on this candle, you see the DTB came down and crunched it. They snapped right back up and tapped the Cobra and fell like a stone. So you want to be ready for that. It's an additional 3 points in your pocket. If you're trading 4 contracts, it's an additional $240 to add to the paycheck. Now look, what's this here? That's right. It's a second level trade because you get a counter move. You see a little green on the Cobra, you see a couple of green candles, but it fails to upset and change the dynamic trend band number two, and you don't get a crossover number one over number two. And here comes a new sell channel. So the minute that new sell channel opens up, you want to trade that next yellow dot right there, that pullback signal line. Boom, down they go. Crunched them immediately. Now, obviously, you're grabbing 3 points and it's a bigger move, but that's just the way it goes, Unless you have something telling you to hold longer, you can hold them longer. You'll get good at this. You'll get some intuition on what to do with those. Market goes into whipsaw during the period where Europe leaves the market. That's right, around 11:30 every day. The European market exits the US market. Everybody's been up all night. They're tired. They're going to leave. Everything starts to get a little bit different, and it leans towards the bias of what Wall Street is trying to accomplish. Sometimes they have, yes, they do, what are called selling boycotts, where the riggers want to push that market up, and the word goes around, hey, don't short, don't short, selling boycott, don't short, you know. And it's kind of because it's a good old boys club down there. If everybody's saying, "Oh, don't short," yeah, they're trying to prop them up, and you start, noting your firm is noting as shorting a lot, you might get a little visit later and say, "Hey, man, don't you want to be in the club?" Now, listen, let me tell you something. Some people may hear me say that, get mad, number one, because I'm telling some stories that I know to be true, but you're not supposed to know that, and that's not supposed to happen, right? So if you're with me on that, you'll understand what I mean. Here's a sell trade here. Boom, down they go. Here's a crossover. Now, I was waiting for one of these to show up. We have another rule. It's a slight modification, very, very simple, and that is if the market, like in this case, forms a buy channel, but before it gets to the 1.5 point spread or an exact crossover, all the pullbacks to the signal line are used up. And that can often happen on a stronger downside move like we had here, because when they finally do start reversing for a new buy channel, the market's in a choppy mode and all those little pullbacks get, because Boomerang is programmed after the opening candle to mark pullbacks to the signal line up to 6 candles. 1, 2, 3, 4, 5, 6. See that sixth one there? Notice here on the pullback and here there's no blue dot. That's because after 6 candles we don't mark them. So, but the modification is if they're all used up and you get a nice strong trend going, in this case up, and a crossover occurs, right at the crossover you can trade a pullback to the Cobra, which occurred right here, and immediately they go up again. So there was your trade on that side using that modification. Here again, notice the trend trade move. Crossover DTB number one over the Cobra. Pull back to the Cobra and up they go. Listen, I go on a lot of different things. I'm a researcher and I love seeing what's in the market, but mostly I just look and see what's out there. I check everything. And I see these videos that are put out by some of these groups. I see the majority of them. They're junk because they don't show you how to trade. I'm showing you exact, crystal clear, precise, and guaranteed 90% winning trade setups. I never see these on these sites when they're trying to sell their stuff. They just say, well, here's a market looks this and that, and the signals are doing this, but they don't tell you here's an entry here, here's an exit, here's an exact entry. It's like, it's vague, and those of you who've been around and really looking at all this stuff that's out there, you know what I'm talking about. You will not find anything, and I guarantee you will not find anything like Boomerang. When you come to these webinars, all we talk about is putting cash in your pocket. Trade signals that are guaranteed to put cash in your pocket, not just theory or I can't tell you how frustrated I get looking at some of this stuff. I was looking at one yesterday. It was one of these deals where it's good if you like that type of trading. It's where they're trading the flow of the volume and all that, the flow of the volume and the ticks, and they break down the candle into different colors, and here's the value area of the candle, and here's the pivot point of the point of control in the candle. Let me tell you something. I was watching that. I was going, this is all fine and dandy, but the way these markets fly around at the speed they're trading, you can't sit there and figure that stuff out. The minute you figure it out, that candle's gone by two other candles. You You need something that works, and that's what I show you in these webinars. It's about making money. Anyway, so this is today. Here's today's. They started off with a big ramp up here, no trade setups here, no counter trade numbered level 2 or anything. We did get, it's a little early in the crossover here, but there was, because of the surge, there was a trend trade set up right here, 875 that shot up 3 points. They went into chop mode, no trades here, nothing to do here. You got a dynamic trend band still trending up, a slight crossover, but a lot of the whipsaw warning. Boomerang has a built-in whipsaw warning, and I talk about that on the blog under the section how to manage whipsaw. Check under resources how to manage whipsaw. Boomerang has a built-in whipsaw indicator. When you see yellow dots, red candle, green candle, yellow dot, blue dot, yellow candle, yellow, blue, green, spy, that's all whipsaw. Just telling you to stand aside and wait. Then you get what? A new sell channel, crystal clear. You've already got the crossover occurring on the dynamic trend band, and here they're matching color. So you got those two factors. You go short here, 18 and a quarter, dives down to 13 and a quarter. More whipsaw, and again the bunker method. Getting back to the bunker method I talked about. Sell, all dynamic trend bands matching. Those are going to be your safest trades when the market's whipsawing and going nuts. 2 winning trades right in this chunk. Here's 2 winning trades right here and right here. And why did that occur? Because the dynamic trend bands matched. Do you see that? This wouldn't have been a trade. This is not a trade because there's no dynamic trend band set up for a crossover matching, but you see when they match as of a winning trade. Here there was a continuation of the sell channel from the weird whipsaw. There was no trade here. More whipsaw. It went crazy again right around 11 o'clock. But then what happens here? Here's a crossover on the upside, a new buy channel. So your first pullback sig lines here, or if you waited for the trend bands to match, it's right here. Either way, they shoot up for 3 points. A counter move, so you got a second level move here coming into the final hour. Buy channel, matching dynamic trend bands, and up they go. Do you see? That was today's. So things are improving all of a sudden. What was that? In spite of the continuing whipsaw and kind of wildness in the market, still, nonetheless, we had 1, 2, 3, 4 trades. Again, not that many, but it's starting to improve because the ranges are spreading out. And we'll see what happens. We'll see what happens the rest of this week. I think it's going to spread out more, but it is August. Again, keep it in mind. It's the dead middle of summer. All the legal industry's off in August practically. Just a few skeleton crews hanging out at the office. It's a if you got legal problems in August, well, you'll be able to find somebody to help you, I'm sure. Again, we don't really follow these indicators that much. You can put them up there if it makes you feel good. They're going to give you bias. In the old, I keep them in there because they're very accurate. But in the old days, we used to follow the indicators to set up boomerang trades. But then I developed the dynamic trend bands, and it just made life so much easier. Okay, so we got crude oil here, and crude oil is a little bit different, not much. With crude oil, basically, you're just using the bunker method, and that is you're watching for crossover and matching dynamic trend bands. We're scalping for 8 to 10 ticks. Now this is really important. I'm saying 8 to 10 ticks because sometimes they'll run 9 ticks. Most of the time they'll run 10 ticks. But sometimes they'll just like run 8 and flop back. If you can get in there and scalp them out. And also sometimes, you got to get in that entry right when it hits. And I'll show you how to do that in a second. So crude oil on the West Coast chart gets going about 5:30, especially after 6. Now again, with crude oil, the slight difference from the stock indexes is if the matching trend bands are there, You can trade anytime you get a pullback signal line, unless it's clearly a fat channel formation. You got to be a little careful. This one here is right off the opening. Short here at 39.72. So 72, we need 62, and there's 54. Here's a long here, matching dynamic trend bands on the crossover. 86, we're going to need 96. Here's 97 right there. So it's very smooth with that crude oil. Now here is a situation where the rule is basically matching dynamic trend bands, which they were right here, or right on the verge of the crossover. You can take them to. So here's one. A short came in, and that dot is not going to print in that signal line unless it hit and held. It's not going to show up after the sell-off. It hits live, and it prints on there permanently on the chart. 95 fell right off the wagon, so 3 winning trades in a row. And again, here's a situation where the crossover had not occurred, but the matching trend bands occurred right here. Same thing, they shot up for 4, winning very fast 10 ticks. I mean, there's going to usually be more ticks there, but we're just scalpers because we want to work on the safety side. Matching dynamic trend bands right here. You go short, 20 comes down to 10. I see your questions coming in. I'll be glad to go over those with you. So you just watch the system along with the information you have about crude oil. I know that with crude oil, you got to watch, like on Wednesdays, for example, which was today. The oil inventory report comes out. I believe that's what Charlie was talking about here. That's an oil inventory report at around 7:30 Pacific Standard Time, and that's apparently what this is from here, or they're just waiting for it, or it goes. This must have been it here. And then they calmed down and they shot the other way. But let me show you the rest of these trades here. Matching dynamic trend bands, 10 ticks there. Nothing here. Now here's a crossover that's, notice, and this is an important, flat dynamic trend band number 2. Market was way up here and shot way down here. It didn't exactly form a fat channel, but it was, the crossover was not a sort of favorable sloping one. But if you took this, 75 came down to 69, shot up a little bit. We use a 13 tick stop on the crude oil, so it's very light stop. The trade either pans out, or in the stop, I mean, they're running 97% winning trades. You can see that on the example I'm giving you today. We haven't any stop outs. This one you might have had to get out. You wouldn't even have had to wait for 13 ticks. They got it, but this frankly is not a very good trade because, again, as I mentioned earlier, flat dynamic trend band number 2, and look at the widespread space between everything. It's just a little bit flaky. You want everything a little bit tighter than that, more like this here. Again, look at that. Matching dynamic trend bands, notice they're sloping down. Whereas here, the signal line's straight down, widespread in here. Look at that. It's more like here. There's your 10 ticks. Here, matching, tight bands, 10 ticks. See that? Just wait for them. Here, it's coming in the, this the market already closed. That's after hour. So that was it. So what do we have? Like, lost track. I think 7 winning trades that day, no stop outs, or maybe that one minor stop out. If you took this trade here, no shame in that. But like 7 winning trades, that was today's crude oil. So again, I don't want this webinar to go that long. Again, let me refer you, if you want to see a large sampling of crude oil trades, if you haven't bought Boomerang yet, obviously if you have Boomerang, just put it on your charts. Even if you don't subscribe to the NYMEX contract, you can get the crude oil delayed data for free, and with the delayed data you can at least look at your still charts later and see how well it looks. So I'll get to your questions in a second. Let me just show you under the resources, if you want to see more crude oil examples, successful crude oil trading with Boomerang, here's an example. And then over here, Okay, we repeated that one. I had a previous one, maybe it's on the blog here, on crude oil. Oh, okay, this was last week. I did a weekly Boomerang profit report, which covered a whole week of trades. In fact, like I said, it's more like an audit, which I do in these biweekly report or weekly reports. They're going to come out every week. You can see right here the biweekly crude oil update, and the stats were as such. Um, Between the period of 7:14 to 7:22, which are all in the video, I go over them nice and slowly so you can watch them. There were 30 trades, 29 winners, and one stopped out. So there was like 20 or 98% winners. The net total of the 4-day period, based on taking 8 to 10 ticks after commission on one contract, would be approximately 2,300 to 2,600 because of the you might have taken 8, you might have taken 10, like that. Minus commission, about 2,300 per contract. If you had 200 contracts, you'd had a $5,000 week. So crude oil and Boomerang is a sweet deal. I'm telling you, you can make a lot of money with the crude. Just get into it. You can watch this video, and as I mentioned, the one on the resources has, I believe, I went over, let's see here. We did this was an audit period too. 7 sessions on this one, 64 trade setups with only 2 losses on crude, averaging 9 trade setups a day over this period. 516 to 526. On 62 trade setups, 7 sessions, it was about $5,000 to $6,000 per contract during that period. So you can read that, study that as well. And so rather than do it today, I'll go to your questions now and answer those for you. I'm going to turn off the recorder. I've recorded everything I've shown you today so you can review it at your leisure. Thank you very much for joining with us today.